I would like to welcome everybody to Stock Exchange of Thailand Opportunity Day for Thai Union Thai Union Group Public Limited Company, or TU. The executives joining us today are Bess Vayanon, IR Manager, and Nikhilesh Alluri, IR Analyst. So today we're going to be discussing the company overview, our key highlights, recent developments, financial analysis, and also our progress in sustainability, our outlook for the coming quarters. To start with a brief overview, Thai Union is one of the world's largest seafood companies. We have almost 40 years of experience in the industry. Since we started in 1977 as a private label or OEM packer, we have come a long way. Over time, as a part of our diversification strategy, we have acquired a lot of brands. We have a leading portfolio of brands, which include Chicken of the Sea International, the number 3 canned seafood company in the US, MW Brands, a leading brand portfolio company, including brands of Petit Navire, John West, Parmentier and Marablu, Maralliance, a leading chilled salmon company in Norway, Australia, and the US, Rugen Fish and Havesta, the leading herring brand company in Germany, and our most recent acquisition, Red Lobster, the world's largest seafood chain company. So just to give a perspective of a scale, canned tuna is one of our main operations. Our production base accounts to almost 18% of the global tuna market. To explain more about the company, as we grew, we've also diversified the species we operate in. We've established a leading position in different species. We group them into 3 main segments. The number 1, ambient seafood segment, which is our largest segment. It includes canned tuna, canned sardine, mackerel, and also other canned seafood, shelf-stable seafood. The frozen, chilled, and other related category, which is mainly a shrimp business, lobster business, crab, and other frozen products. And the last segment is a pet care, value-added, and other seafood segment, which is consists of mainly pet food and value-added products and other seafood products. So over time, as I was saying, we acquired a large portfolio of leading brands. Some of them are over 100 years old. John West, our number 1 canned seafood, canned tuna company in UK, Ireland, and Netherlands. Petit Navire, number 1 canned seafood brand in France, King Oscar. Premium canned sardine and mackerel brand in the US, Norway, and Australia. Select Tuna, our domestic brand in Thailand, number 1 canned tuna. Chicken of the Sea Frozen Foods, the number 1 importer and distributor of frozen products in the US. Chicken of the Sea International, number 3 canned seafood company in the US. Havesta and Rugen Fish, number 1 herrings brand in Germany. So over time, as we focus more on our downstream strategy to go towards the consumer, a large portion of our revenue comes from a branded business, which accounts to almost 44%, 42%, and almost $13.3 billion in sales. We've also expanded our influence throughout the globe. You can see in the chart our global presence. So I would like to pass it now to Kun Bess Vayanon to talk more about our key highlights.
And in terms of the sales breakdown by geography, the North America, or mainly the USA, still account for the largest chunk of our sales at 39% during the first quarter of year 2016, and then followed by European market, which contribute 33% of our total sales. In Thailand, we account for only 8%, and Japan 6% of our total sales. In terms of the financial history, we are the growing company, and over the last 10 years, we have seen a consistent, strong growth record, with the sales growing at 9.3% CAGR from year 2006 to year 2016. And the EBITDA or the profitability trend, both the EBITDA and net profit has been growing along the same line. Due to the profitable operation all this year, we as Thai Union, we never failed to pay dividend for any single year over the last 20 years of listing. For the key highlight, for the recap for the first quarter of year 2017, we see the weaker operation, but it has been offset by the investment and foreign exchange operation. On the top line, we have seen our sales, we have recorded the first quarter year 2017 sales of 31.4 billion baht. That is up 0.7% year on year. We note that due to the Brexit and the foreign exchange rate volatility, the European currency and the US dollars has weakened very significantly against Thai baht. As a result, if we take out the impact of the currency volatility, we will see the sales actually been grown by 3.5%. But on the gross profit and the operating profit level, we have seen a weakness compared to last year. We note that during the first quarter of year 2017, we see raw material price rising very significantly compared to last year. We have seen tuna price increase by 30% compared to last year, shrimp price by 14%, and salmon price increased by 15% compared to the first quarter of year 2016. That has posed a problem in terms of difficulty of passing on the raw material price to the customer. So as a result, our gross profit has seen a decline by 13% compared to last year, and operating profit has seen a decline by 45% compared to last year. However, we continue to report a strong net profit growth of 19.3% due to our prudent currency management progress, and we have recorded FX gains during the quarter. And we also make a good investment contribution from the most recent acquisition, the largest seafood chain restaurant in the US and in the world, the Red Lobster, which has contributed handsomely to our profits line. This will be the quick financial summary. We can see that our total sales have been increased by 0.7%, gross profit and operating profit has shown a decline compared to last year, while the EBITDA has continued to show a stable trend compared to last year, and net profit are reporting a strong growth of 19%. We have seen during the first quarter of year 2017, our net debt to equity has dropped. From the end of last year of 1.37 now down to 1.34 times. That is due to the strong cash flow profile of the company and the discipline of the company that we are continuing to pay down the debt during the quarter. So during the first quarter of this year, from end of last year until the May 5th, our share price has been increased by 4%. This is the long-term historical profitability of the company. We have seen up and down, and there has been a seasonality factor. But over the last 3 years, as shown in the slide, we can continue to maintain a stable profitability profile throughout the period. For the recent development, we have been received multiple recognition from Finance Asia, from Asset Asia Award in terms of the treasury. We have launched a number of products, mainly the Harvester product, canned tuna in German market. We have launched a Q-Fresh frozen seafood. That has been sold through online particularly to the Thai consumer and Thai market. And we have a number of investor activity happen during the quarter. For Finance Asia, Thai Union has won 6 major awards at the 17th Annual Finance Asia Poll, the poll of which has been contributed and surveyed among the portfolio manager, buy-side and sell-side analysts in Asia. So we have won the number 1 Best Managed Company in Thailand, number 1 Best CEO in Thailand, Kun Thirapong Jansiri, the number 1 Best CFO in Thailand, Mr. York Irie, the number 1 Best Investor Relationship Program in Thailand, number 1 a Corporate Social Responsibility Company in Thailand, and the number 1 Most Committed Corporate Governance in Thailand. And for the brand launch, we have launched our Q Fresh brand, in which the consumer in Thailand can go and check it out at www.qfreshshop.com. If you want to order some fresh seafood from Thai Union. Despite the volatile operation output and the difficult and challenging business environment, we continue to see a strong cash flow profile the company has been generating. So as a result, we have paid the final dividend for the second half of year 2016 of 0.31 baht, and it has been paid during 20th of April. So compared to year 2015, we continue to maintain the dividend on absolute basis of 0.63 baht per share for the shareholder during year 2016. For the financial operation, we would like during first quarter year 2017, we would like to highlight a number of difficulties and challenges that we have faced during the first quarter year 2017. As you can see on the slide, the Thai tuna, the raw material price has been rising very significant compared to last year, with the tuna price increased by 30% compared to last year. Shrimp price up by 14%. This is partly due to the flooding problem down south in the early of this year. The salmon price are continue to increase by 15% compared to last year. So all this has been attributed to the fact that our profitability profile has been weakened. And to make the matter worse, Thai Union as the exporter, 92% of our company sales are incurred in a non-Thai currency and export basis, both on export basis and on subsidiary basis. Our exchange rate volatility has worked against us during the first quarter year 2017. Okay, and on top of that, we have continued to see the political dynamic that has been changing compared to last year. We have Brexit that happened during the second quarter of last year that has weakened pounds very significantly compared to last year. And we have a change in government in the US, and the election in France has just recently completed. To highlight here, we have seen that Thai baht has been appreciated against US dollars by 1.5%, against euro by 5%, and against pound, UK pound by 15%. So this has worked as a headwind for us in terms of growing our company and maintaining the profitability profile of the company. And as you can see here, we continue to see raw material price has rising compared to last year. Tuna, shrimp, and salmon price has been rising very significantly compared to last year. And for the first quarter, I would like to recap some few key takeaway for the quarterly result. We continue to see in terms of sales, despite we have reported sales of only 0.7% growth year on year, but due to the currency appreciation, Thai baht appreciation against the key functional currency, we continue to report a growth. So that's if we take out the impact of the exchange rate volatility, we would continue to report a sales growth of 3.5% in the current tough business environment. And gross profit margin has gone weaker due to the raw material price increasing, as mentioned earlier. However, on the SG&A and cost control, we have done relatively well. So on SG&A expenses, on absolute basis, we have continued to see only an increase of SG&A expenses of only 1.6% compared to last year, which an indicative of the fact that we have been very prudent in terms of cost control. On the non-operating items, we continue to see, due to the very significant baht appreciation against key functional currency, we have recorded an FX gain during the quarter of 590 million baht, and as a result of such baht appreciation. And on top of that, due to the tuna price increasing, our fishing fleet operation has turned into profit and has contributed the profit to the company as well. And last but not least, we have invest in Red Lobster, which has contributed very handsomely during the first quarter of year 2017, both in terms of the interest income from the investment and the profitability improvement that the company has made during the first quarter. And due to this big investment that we have made during the fourth quarter of last year, Red Lobster, the largest seafood chain restaurant, we have done a numbers of initiative, and this is ongoing initiative that we are currently working with them. Whether on the kitchen of the future, in which we would help them and Red Lobster streamline the operation and hope that their operation will be more efficient. So as a result, would help in terms of the labor waste reduction. They will continue to host our signature event program like Lobster Fest, Endless Shrimp, which continue to attract a growing crowd of consumer to them. And on top of everything, we are currently in the process of discussing with Red Lobster on a prospect of having Red Lobster doing the international expansion outside of North America market. On the sales side, we are going on line by line in terms of operation. On the sales side, we continue to grow 0.7%. If we would have broke down a little bit, ambient seafood was seeing a bit of a tight spot there due to the fact that the tuna price has been increasing very significantly. So the sales has been continued to be sluggish, particularly let's say the problem in terms of weak sales of ambient seafood has further complicated by the significantly depreciation of European currency. However, we have continued to see chilled and frozen seafood product, particularly on shrimp and salmon pricing. We continue to be able to pass on and reprice our product, which resulted in a satisfactory improvement in terms of sales. On pet care business, on pet food, we continue to record a very strong double-digit sales due to the improved penetration into the existing market. Okay, so as a result, we continue to see on Thai baht reported sales growth has been increased by only 0.7% compared to last year. In terms of the breakdown by geography, I have been discussing briefly early on. US has continued to contribute the largest slice of our share at 40% contribution, Europe at 31% of sales contribution to our company. But in terms of branded, due to the fact that we have owned a number of portfolio of branding, leading seafood and frozen branded operation around the world, such as Chicken of the Sea, John West, Petit Navire. So as a result, our branded exposure, branded product portfolio account for 42% of our total sales, with the remaining 58% our sales contributed from the private label business. Gross profit margin has seen a decline. That is mostly due to the raw material pricing increasing. But the negative impact was partly been offset by the fact that the salmon business, we have been able to pass on and repricing our product. So as a result, compared to last year, when the salmon price been rising very significantly, we have turned around our European salmon business into a profitable territory already. On the operation profit, we have seen a decline. These are mostly due to the fact that the gross profit margin has been weak during the quarter. But due to the stringent cost control, the SG&A to sales, despite the ratio was pretty stable compared to last year, the actual increase in absolute of terms of the SG&A expenses has been up by only 1.6%. That has been indicating the prudence cost control that the company has been implementing throughout the organization. On the net profit line, despite the fact that we have weak operating profit, we have been having a number of good support in terms of coming and help shore up and support the net profit to report the final net profit growth of 19.3%. Part of those are driven by the positive income contribution from the strategic investment in Red Lobster. So both from the interest income and positive equity income, so the company has improved very significantly in terms of the profit contribution compared to the fourth quarter of last year. Baht appreciation against U.S. currency and European major currency has boosted FX gain during the quarter and has attribute up to 590 million of FX gain during the quarter. So, and other than that, we have the lower minority interest expenses due to the company restructuring that happened during the third quarter of last year. We have lower tax expenses due to our more prudent tax management scheme and policy. And the fishing fleet has been reporting profit now due to the tuna price has been at a very high level. So as a result, the EPS has showing the same trend during the first quarter year 2017. We have continued to report an EPS of 0.31 baht or 31 stang, increasing by 19% compared to last year. But on the free cash flow side, despite the fact that raw material price been increasing very significantly, we continue and it is clear that during the second, third, and fourth quarter of last year, we are struggling in terms of generating a positive free cash flow. But during the first quarter year 2017, it became clear that the company efforts to control and improve the efficiency of the inventory and operation has resulted in a favorable free cash flow profile. And in the first quarter of year 2017, we have reported a positive free cash flow of 786 million. So this will help partly funding and repayment of debt. And of course, we are paying dividends twice a year, and this positive cash flow would help contribute it to the dividend payment as well. For the debt restructuring, we have successfully refinanced a lot of debt that as a result from the acquisition of Red Lobster during the fourth quarter of last year. So as a result, the structure of debt has changed very drastically compared to in the first quarter of year 2017 compared to the fourth quarter of year 2016. As you can see here, the short-term loan has significantly reduced from 56% of the total interest-bearing debt down to only 20% during the first quarter year 2017. And among the long-term loan, the majority of it has been due to be scheduled to be paid down from year 2021 onwards. Therefore, we believe we have structured our debt in a way that we are free of any near-term risk payment obligation. In terms of the financial ratio and financial strength, we continue to see the ROE, return on equity, and return on has been improving back to 13.5% from the low of 8.4% during the fourth quarter of last year. This is mainly due to the improved profitability profile of the company. The ROCE, the return on capital employed, has declined by 3% compared to last year, but still improved very significantly compared to the fourth quarter. The decline year on year is due to the fact that we have been consolidating Red Lobster, and as a result, we have employed a significant higher amount of debt on our portfolio. But as a result, we also been reporting an improved profitability compared to the last quarter as well. In terms of the debt profile, we have seen a reduction of debt profile compared to the fourth quarter year 2016, both due to the fact that we have improved the profitability compared to last year and the fact that we have continued to pay down our debt through our strong cash flow position that we have been generating during the first quarter of year 2017. I'm sorry. For the segment breakdown, we have here the chart that show the longer term trend of the raw material pricing. We have seen here that the tuna price has been averaged on the about 12,000 US dollars per ton during year 2014 and about 1,100 $1,000 during year 2015. But during year 2016, the raw material price been increased very significantly. And as a tailwind of it, we continue to see tuna raw material price remain at a very high level during the first quarter year 2017. We expect that the high tuna price would continue probably into the second and third quarter due to the fishing restriction in India that happen annually and spark the seasonal increase in the tuna price. But on the other hand, we continue to be able to pass on increase in terms of the tuna raw material price to our customer. But still, during the first quarter, the sudden increase in tuna raw material price has put a pressure on our tuna operation. The white shrimp has been increased during the first quarter, has been increased by 14% compared to last year. But during April year 2017, second quarter, we start to continue to see the local shrimp production start to come into the market. And according to the fishery department of Thailand, they seems to be expecting the more supply of shrimp coming on in Thailand due to the local shrimp farmer are learning to deal with the EMS problem better year by year. On salmon raw material price, of course, last year we have seen a very significant improvement, and it continued to be improved, it continued to be higher during the first quarter year 2017, by 15% compared to last year. On the other hand, we continue to see Thai baht appreciate against all the major functional currency of Thai Union. Thai baht appreciate by 1.5% against US dollars, 5% against euro, and 15% against UK pound. That is one of the key reasons why our profitability and our sales growth has been under pressure. For sales breakdown, ambient seafood still account for 45% our sales, frozen and chilled seafood 41% our sales, pet care, value added and other product 14% of our first quarter sales. In terms of dig down on the segment wise, ambient seafood, we have seen the sales decline by 7.4% compared to last year, and quantity wise down by 6%. This has been under pressure due to the weak demand, particularly out of the European market. We can see that the gross profit margin profile on the total wise, our profitability has been declined from 18% during the first quarter of last year down to 16%, down by about 200 basis points. Those are mainly due to the fact that the tuna price has been increased very significantly by 30% compared to last year. And yet we have been mitigating most of them out, and as a result, our gross profit margin has been declined by only 2%. And please note that our private label product, we are very resilient, and despite the high raw material pricing, we managed to improve our private label margin by 2 percentage points compared to last year in the ambient seafood business. In terms of frozen and chilled seafood, we are continuing to see a solid growth here, both in terms of the sales growth that has been contributing from product repricing. We are able to increase our pricing, and our quantity sales has continued to grow by almost 3%. But due to the high shrimp price and salmon price, our profitability has weakened marginally from 10% last year down to 8% last year. But of this, we have been able to confirm that our European salmon business gross profit margin has turned to become positive territory already. That is compared to the loss, let's say, of negative, gross profit margin throughout the year 2016. So that has been helping supporting part of the profitability downward trend as well. On pet care and value added product, we continue to see a strong growth of 17% compared to last year. Most of these are being contributed by the strong growth in the pet care business. and gross profit are continue to be strong at 22%, significantly higher compared to the 14% of the consolidated level. In terms of the total company consolidated, we have been managed to report the total sales of 31.4 billion baht. Of this, we have reported a gross profit margin of 13.8%, and as a result, gross profit that we have been reporting during the first quarter year 2017 was 4.3 billion baht. For first quarter year 2017, post the result, we have released the guideline, the new sets of guidelines for year 2017. We have marginally managed our sales expectation down, in which year 2017 we are expecting to generate 145 to 150 billion baht. That still represent the growth rate of about 8 to 10% compared to last year. Gross profit margin will be on the lower end of 15 to 16%. Please note that during the first quarter we have been generating a gross profit margin of 13.8%, which is a low seasonal quarter. We are expected to improve as the second and third quarter are normally a stronger quarter of the company. The SG&A to sales ratio target has still been maintained at below 10%. Last year we have managed 9.8%, and we continue to be focusing on cost control initiative to make sure that the SG&A to sales ratio are still maintained below 10%. The effective interest costs we are expecting no material change from year 2016. Effective interest tax rate at 15%. This year we are planning to spend on capital expenditure approximately about 4.8 billion baht, so roughly about $120 million. These are mostly attributed to the organic growth and maintenance capex, and on top of that we have a number of growth initiatives, particularly the marine ingredient, in which we are constructing a few new plants, a fish oil plant in Germany. And of this, we continue to believe in a strong cash flow profile company that's been generating, and we are still committed to pay and keep the dividend policy of no less than 50% of the net profit every year. And in terms of the growth prospect, we have been acknowledging that the first quarter year 2017 has been very challenging. The tough part of it is that we may continue to see year 2017 as a continuing challenging year. Due to raw material price continue to remain at a high level, we continue to see a lot of change and in the political landscape, the global political landscape, particularly with the upcoming election and the past election and the new government that we have to deal with. But on top of everything, we are still committed on a number of initiatives. On terms of the growth prospect, we are still committed to the organic growth, in which we are continuing to grow our own existing brand, whether the John West brand in UK, Petite Navire brand in France, Chicken of the Sea brand, which is the third largest brand in the US market. We are continuing to see and make sure that those brands are continue to deliver a strong organic growth into year 2017. And we have launched a number of new business initiatives. Those are including the emerging market, where we are now launching our John West brand, which is number one brand in the UK market, but we now launch it into the Middle East market. This brand has been launched as of last year. We continue to see a strong reception in the Middle East market, but it is still in the early day, but we continue to see a strong good market prospect in the Middle East, particularly on the ambient seafood business, or basically canned seafood business, so the canned tuna over there. Another emerging market that we are having an eye on and work on very hard this day is China market. We have been launching our frozen seafood business and selling lobster product salmon product and shrimp product, all frozen, of course, into China under King Oscar brand. So we are looking to exploit and leverage on our strong supply chain under our company management, and we are looking to integrate the global market as one. So we are launching the King Oscar brand into the China market. As of beginning of this year, we are looking to grow their business over there. I mean, due to the Chinese consumption of seafood has been growing very rapidly over the last decade, along with the increase in wealth and growing income of the country. In terms of the marine ingredient, we are working very closely and leverage on our technology through our global innovation incubator. We are now working on the fish oil extraction. So in the past, when we process tuna, I mean, a lot we have been receiving a lot of scraps, whether from bone, whether from head, in which are not usable to be put in the canned tuna. So a lot of those scraps has been sold as scrap as fish meal. So we are working on valorizing and increasing the value of those scrap by making and extracting fish oil out of it. Currently, we are in the process of implementing a plant construction in Germany, a fish oil plant construction. It will be a top grade fish oil manufacturing facility in the world. So we are looking for the fish oil facility to start producing and generating the revenue toward the end of this year or beginning of next year. And on top of that, we have been focusing on the food service initiative. Okay, on this, we recognize that currently the frozen and chilled seafood are sold as a commodity and sold out of Thailand as frozen shrimp, which are low margin, very competitive, and very commoditized. So we are now currently working with the major chain of restaurants around the world, particularly in the US market, to help and collaborate with them to come up with a better menu. And instead of presenting them and selling them the commodity shrimp, we are now working on to presenting them and providing them a partnership where we could ship them a menu items rather than the commodity. So in a way, this will help our partner or customer working more efficiently with their labor, with their kitchen space, and with their cooking time. And as a result, we're hoping that this could yield and result in both the better margin due to the value added of the product and the longer term and longer lasting relationship between us and our customer. And last but not least, on the M&A side, on the merger acquisition side, we have been last year entered into this major investment, $575 million or over 20 billion baht investment into the Red Lobster, the largest seafood chain restaurant in the world, with a revenue of about 2.5 billion generated each year. So with this restaurant investment, we are looking to be able to find the outlet, find the new market for our food service initiative, our frozen and chilled seafood. So by making this investment into the Red Lobster, it is not only a positive contributor to our net profit, but it's also our strategic move to move closer to our customer, to be more present with them. So instead of being just any shrimp or frozen shrimp provider or lobster, any common lobster provider, we would probably be able to sell it out through the Red Lobster chain of restaurant. So as a result, we are expecting the margin will be improving as a result as well. But in the near term, we only are investing in 25% stake in Red Lobster, which has been yielding us a very handsome positive return as we have seen in the first quarter of this year. Okay, so In sum, I mean, we are working despite the very challenging business outlook and environment. We are continue to working very hard to at least to ensure that our company profitability and performance are kept intact. And as you can see, during the first quarter, our net profit has not been swayed, and on the other hand, has continued to show a very solid growth despite the challenging environment that we have faced during the first quarter. Okay, so I would say that would sum up with a presentation from Thai Union. So I mean, should anyone has any question, both from the floor and both from the online viewer, please let us know if you have any question that you would like to raise. Thank you. ภาษาไทยได้นะครับจะตอบ2เวอร์ชันครับSo I believe this would be the short meeting. Please. Due to the fact that we are currently owning only 25% of the company, and is our affiliate company, we are, let's say, we are not entitled to really share that. So, but rest assured, I mean, due to the company profitable in nature, it is probably yielding about similar ROE as our company Thai Union Group ครับ
What's the margin for what's the net profit margin for the Red Lobster business?
That one we cannot disclose. Sorry, it is proprietary information for our partner. The current about the ownership of Red Lobster, we currently own 25% of Red Lobster. We also own an investment in a convertible bond that could be converted into 24%, okay, of Red Lobster upon conversion. So we have effective holding in Red Lobster by 49%. But legally, of course, we own only 25% currently because another convertible are currently yielding a fixed interest income. Okay, so that has been providing a stable income for us. But the remaining 75% stake of Red Lobster are currently held by Golden Gate Capital, which is the private equity fund, and they are the owner of a number of chain restaurants in the U.S. It's 10 years.
10 years.
It's 10 years, yes.
Options for 10 years.
Exactly. We will decide if because the deal was structured in a way that we have only 25% risk capital, which is $230 million US. The remaining $345 million in terms of the convertible bond are currently, let's say, if we believe that Red Lobster business is good for us, is accretive, and has been providing a strategic value to us, we will probably looking to increase investment into the company. But otherwise, we have 10 years to decide upon it, and if we don't like it, we can always vest it at the end of the period. There has been a question from online that inquiring about rising tuna price that we have not been able to pass on during the first quarter. Okay, so there's been an inquiry if we would be about the prospect of the tuna price toward the end of the year and whether we'll be able to pass on to the customer. Yes, we are currently in intense discussion with our customer. Given the pounds and the euro has been weakened significantly compared to the past year and the high raw material price, it would be difficult, okay, to pass on an increased cost in a significant amount. But of course, we are definitely trying and we are looking, and due to we are going into the high season or an improved season in terms of demand in the second and third quarter, we are looking to improve our profitability even on the tuna side in the upcoming second and third quarter. Yes, please.
What is the good impact of euro coming on? One question. Second is, you have been granted global treasury license and you have given the business to a foreign bank, Hong Kong and Shanghai bank, not to the private bank. Though originally you have been assisted by BBL, why not you consider the local bank first? Secondly, what is the impact, good impact in the profitability? Do you have some API so that this will inspire to another SCT listed companies to acquire this license effective as compilation process?
Okay.
Global treasury license.
Okay. On the impact of the weak European currency against Thai baht, it has been already manifest during the first quarter of this year. It impact, okay, the translation of our operation in the European continents. So I mean that is not only limited to euro currency but also to the UK pounds currency as well. So as a result, our sales has been lower on a translated basis. That's one thing. And second thing, it make it more difficult for us to pass on a high raw material price because it is act as a double impact. I mean, both the currency depreciation or a cost of inflation and the actual price inflation of the raw material price. So that has put some pressure on our profitability of the business out of Europe. Okay, so that has been already been seen during the first quarter. For the Treasury Center, we have been working with the HSBC due to their extensive banking network. So we believe that we pick HSBC due to their complete infrastructure, not based on the fact that they are private, they are local, they are foreign. But please note that we do have banking relationship with all major banks in Thailand, whether BBL, whether K-Bank, whether SCB. We have all major, we have relationship with all major banks in Thailand, and I mean we are looking to do business with any one of them, provided that it will work in the best interest of our company and our shareholders.
I would like to comment upon this, that you should have a mix of the banks, not only a loan banks, because every bank is having good attributes like BBL. That was the first bank I see in the Bank of Bank family business presentation by your CEO. He said that Kunchati Sopanpan has taken and extended the first help to him for the loan. You should not forget the good relationship extended by the biggest bank by assets. Contribute with a mix of the banks, this will benefit you.
Let me assure you, we have we have relationship with all major banks in Thailand, and BBL is definitely not been opt out in this case. Thank you very much. As I assume that there will be no more question either from the floor or from the online channel. Do you? Okay. So I mean, let's say we would like to conclude the meeting as of now.
Thank you everybody for making it here. If you have any further questions, you could contact at ir@thaiunion.com. we'd be more happy to help you out. And we would like to adjourn the meeting now. Thank you.
Thank you very much. Thank you very much. Definitely. Yes, this is my business card, please. Definitely. All right. Mr. Bassett. Thank you very much.